Hello out there. We're on the air. Welcome back to the 88 Sats radio channel. I'm joined by my co-host today, Arnie. First to Arnie. No, he's not going to contribute much today. So we're doing a rare one here. We're doing a rare video, not live. I wanted to talk about everything that's happening in MicroStrategy. We've been talking about it quite a bit lately on the channel. And I thought it was just a good opportunity today to take what's going on, take an objective look at it. I am a shareholder myself in MicroStrategy, so this is going to be a little bit biased. But at the end of this, I hope you just have a little bit better understanding of what's going on here from a very high level. I'm not a real technical guy. I have a finance background, but there's still stuff that's over my head. So I want to keep things very simple today to try to explain what's going on here. Because as we'll see here, and we're going to use some spreadsheets as well. People usually like the spreadsheets on the show. So we're going back to the spreadsheets, but this is what we've seen in the last, this is year to date, MicroStrategy. So we're at 489 US dollars per share. That's up $420 this year, 600%. So you look at something like that and you think, okay, what's going on? Seems too good to be true. And once you hear what we're going to talk about today, you might think the same, and it might be too good to be true. So I'm going to talk about the ins and outs, what's going on, the pros, the cons, and then at the end of it, I'm going to give my recommendations based on today for short-term people and for long-term people. So I titled this video, The Big Long. We've all heard the Big Short. I'm sure we've all seen the movie. And with who's in that? Ryan Gosling, Michael Scott, or Steve Carell, and a few other big names. It talked about the 2008 stock market crash when Michael Burr saw what was coming in the housing market in the US and shorted it and ended up being right. And so I'm going to bring up the spreadsheet here. We're going to go through a few things. I think it's easier to see on a spreadsheet versus me just talk about it. So we're going to go through a couple different things here. Try to, you can always go back and watch this if a few things don't make sense. I just kind of want to lay the groundwork for MicroStrategy itself, because I know that there's a lot of people, there's a lot of attention on it. I think it jumped into the top 100 today. And so it's the most traded, highest volume today on the stock market. So it's not like people haven't heard of it. I just think people don't really know what's going on there. And so part of this is going to be hopefully grow your conviction a little bit over the MicroStrategy stock, and maybe hold off if you're not a shareholder yet. So let's get to, let's see what Burr did back in 2008. So Michael Burr of the Big Short, who shorted the 2008 housing crisis, housing collapse, financial crisis, which is kind of what Bitcoin was born from. If you look at Bitcoin, when it came out in 2009. The white paper was introduced in October 31st, 2008, and the first Bitcoin block was mined on January 3rd, 2009. And within that block, it had a newspaper article, Chancellors on the Brink of Financial Collapse. It was a new newspaper article from 2008. So it was essentially saying, this is what happened. They didn't fix it. Here's the fix for it. Here's Bitcoin. So Bitcoin itself is essentially shorting the fiat system. It's exposing the fiat system. And I'll take this down for just a sec, but maybe just to explain a little bit about Bitcoin. So kind of my long-term thesis on Bitcoin is that it's going to reprice everything. That's what it's going to do. And I know we see the price going up and down in fiat terms, but if you compare fiat to Bitcoin, kind of the main metric that I think most people resonate most with is with fiat, you have a currency that's completely illusionary, almost to a point where we don't know how much supply is out there. We have numbers that they tell us, figures that they tell us, but they've never really been audited before. And how accurate are they? And that's what's kind of measuring every asset on earth right now is the US dollar in one form or another. So we have one asset that we have no idea how much supply is out there. We don't know how much supply will be out there in 5, 10, 15 years from now, because it's very reliant. When you give a small group of people the ability to print money, that kind of has a trickle-down effect on all aspects of society. So with Bitcoin, it's completely different. You cannot print Bitcoin. You cannot create Bitcoin. We know how much Bitcoin there is today. You can go to the website right now, see how much there is. I think it's 19.6 million in circulating supply. And we know how much is going to be there in 10 years, 20 years, 100 years. The supply schedule is known. And so when you have an asset where you know how much there is, you know how much there's going to be, you can predict things off of that. It's much more reliable. You can actually price things against that. So that's what's going to happen over time here. That was the solution to fiat, that's Bitcoin. And MicroStrategy and Michael Saylor in the big long, I'm guessing there's going to be a big Hollywood movie made about Saylor in the not so distant future. But we're going to look back on these times much differently than we look at it today. When you're going through something, it's a much different lens than looking back. So the big long, he's taken the fiat system and he's shorting it using Bitcoin and using the tools and the resources that are available to him to do that. So going back to the spreadsheet here, Michael Burry, there was a movie made about him. He made $100 million off shorting the US housing market. Saylor, this is just my guess. Last time I heard it was 8 billion, how much MicroStrategy has made already off of this trade. But let's say 10 billion. So it's a little bit different ballpark there between Burry and Saylor, two Michaels. And they kind of look like just numbers and words, but as we know, the difference between a million and a billion is basically a billion. So this is a pretty big margin here. Doesn't look like much, but the difference here is staggering. So what is MicroStrategy doing? They are selling shares to buy Bitcoin. They're issuing shares to buy Bitcoin, and they're issuing debt to buy Bitcoin. That's the strategy. And their goal, to increase the sats per share. For all the shareholders out there who hold a MicroStrategy stock, their goal, everything they're doing right now, is to increase that number, increase the sats per share. So what does that look like? In terms of issuing debt and issuing shares, we're going to focus on a convertible debt here. And this isn't exact. This isn't the everything you need to know about it. This is just a very high view of what's going on here. So how is MicroStrategy affording to buy so much Bitcoin? They don't make a whole lot. I mean, they make tens of millions of dollars every year from their operating company, which is a software business. But that's not enough to get to 300,000 Bitcoin. So they've been taking on debt, and they've been seeking out private investors to give them some money. So let's use, and they've been getting ridiculously low rates. So I want to kind of start by exploring how they're doing it, because they have some loans out there for like 0% rates. They have some for 0.2% of a rate, 0.5, 1%. They're varying depending on the contract, depending on the timing of it, depending on the external factors going on. That determines some of the rates. So I think most of them are about 5 or 6 year terms. We're going to use 0.5% here. So if an investor had $1 billion kicking around that they wanted to buy convertible debt with MicroStrategy. So let's say they got 0.5%, which is ridiculously low. Off the interest off of that, they'd make $5 million from giving Saylor $1 billion. They make $5 million off of that, which is very low for holding $1 billion. And if they just put it in the bank, if they put it into one of the institutions that take deposits and pay out interest, they could probably make $50 million off of that easily, or something similar to that, something fixed. It might be lower, it might be a little bit higher, depending on where you are in the external cycles, but we'll go 5%. So they're basically missing out on $45 million there. That doesn't make sense to most people why they would take such a low rate. But then if you look at the convertibility aspect of this, so let's focus on these right here. So let's say that with that $1 billion, let's say the share price at the time was $250. So I'm going to bold that. So you got $1 billion. The convertibility aspect of this, the equivalent would be 4 million shares. So keep in mind here that with the options to convert it to equity, or keep it as debt. That's kind of what we're talking about here. So with $1 billion, $250 per share, they could get 4 million shares for that. That's the convertibility aspect of this. So that equals here, you can see the $1 billion. But most people who are investing in MicroStrategy are expecting the price of Bitcoin to increase. So let's say that it went from 250 to 450, which we saw in the last month or two. So they had the same 4 million shares, the convertibility there, that's the convertible debt aspect of this, 4 million shares, and they increased to $450 per share, or more accurately, $490 per share. But we'll say 450 just for ease. So that means that they could convert that. They get this price locked in. That's the beauty of it. They get this price locked to 250 whenever they convert it, whatever their share price is. So if they were to take that, their 4 million shares times $450, the new share price, they would make $1.8 billion with a profit of $800 million. So that's the difference there between 50,000 and 50 million and 800 million. That's why people are doing this, for the convertibility aspect of this, assuming that Bitcoin's going to go up, assuming that MicroStrategy is going to go up. That is the difference. That's why people are using this. And then, so that's the best case scenario, right? Worst case, they're still going to get their money back. They're still going to get $5 million off that. They'll obviously lose in the trade. They took a risk though. So that's kind of Saylor's whole thing, is that the MicroStrategy share provides volatility with a limited risk. So this is the floor that they would get, 5 million. And this is this isn't really the ceiling, but this is kind of what they would, more along the lines of what they would expect, is 800 million. So when you break it down, you say, okay, well, that doesn't really make sense. Why would, if you look at the share price today, there's a 5x premium on it. I'm going to talk about that right here. So these were the last, I'm going to delete those. This was the last update we had on Bitcoin per share. So at the time when we had the last presentation Saylor did, I think it was their quarterly meeting, but they said that they had 252,220 Bitcoin. And at the time there was 235 million shares outstanding, or not outstanding, but expecting to be, I think they call it diluted, which means that they're going to expect that all of the people who took on the convertible debt would be converting those shares. They'd have to issue new shares on top of that. So at the end of the day, it comes out to about 0.1% of a Bitcoin per share. So this is a little bit more updated. This is the figure that I had in terms of the Bitcoin. They now have 331,200 Bitcoin. This is as of yesterday, I believe, or Monday. And I kind of just estimated this because I figured the percentage sats per share would be about the same. So we're going to use the 0.1%. So what does that mean? If you got $95,000 kicking around right now, you can buy one Bitcoin. Or if you got $95,000, you can buy 195 shares in MicroStrategy. So one share, as we just calculated up here, the total Bitcoin divided by the total amount of shares, diluted shares, is about 0.1% of a Bitcoin, or 100,000 sats for the Bitcoiners out there. So if you had 195 shares, that would get you 0.2 of a Bitcoin, or 20 million sats. So you look at that and you say, okay, well, I could either get one full Bitcoin with $95,000, or I could get 0.2 of a Bitcoin with $95,000, which means since it's about 20 million sats, that means that there's a 5x premium on it right now. Seems high. It seems high. And that's hopefully kind of the moral of the video today, is it does seem high. And you have to look at this. You can't just see a stock price going up. You actually have to look at things objectively and ask why. Why is there a 5x premium on this? So the why here that I came up with is the convenience aspect of it, for one. Right? So think about the big money out there the big, big, big money, anybody with $1 billion, very convenient for them to do this. Or just with a MicroStrategy share. You can buy it easily, you can sell it easily, and you can store it easily. The last thing that a billionaire wants to have is to learn about Bitcoin, learn how to store it, learn the ins and outs. Like, think how long that would take, even if they hired a whole team to do that. I mean, this will probably happen. This is kind of playing into the narrative here for my conclusion, but that will happen eventually. We're just not there yet, right? So that's the convenience aspect of it. They don't have to learn about Bitcoin. They don't have to learn how to store it. They don't have to learn how to send it or anything like that. It's very convenient for people. Also, the speculators love it. It's very volatile. And so most people expect, if you've been paying attention to Bitcoin at all, you know that most people are expecting a very big jump between now and this time next year. So they're kind of front running Bitcoin through the MicroStrategy shares, speculating. And there's rumors, not rumors, but as mentioned at the start of this video, the MicroStrategy is already inside the top 100 public companies out there. So it'll eventually be in the S&P 500, and we know what happens with the S&P 500 companies. They get put into a whole bunch of different pension funds out there. Just by being part of the S&P 500, you're going to have much more demand for the shares. So people are speculating on that. They're anticipating what's coming, and they're trying to buy in early right now. The rules are very clear. Unlike Bitcoin, there's no framework for capital gains, for buying, for selling. We're just not quite there yet. But with the stock market, with the legacy financial markets, the rules are clear. And for a billionaire, you want to make sure that things are clear. You have a big legacy to look after here. And you don't want to put it at risk by getting into something and buying Bitcoin with the potential of losing it, with the potential of the rules changing. The rules have to be clear. The framework that Saylor always talks about is clear within the stock market, within the rules that MicroStrategy is playing under. And Saylor's been very transparent in terms of the strategy. Their operating company is a software business, but he's since then called them a Bitcoin. Oh, what did he call it? Anyways, a Bitcoin. They want to buy Bitcoin. Their whole goal here is to increase the sats per share for their shareholders. They want to buy Bitcoin, see the price rise, sell some shares, issue more debt, buy more Bitcoin, see the sats per share increase. That's their goal here. He's very transparent with that. He's laid out his next 3-year strategy in terms of $42 billion they're going to be buying through different routes. But he's very transparent. There's no question marks here of what's going to happen. And people like that. Plus, he's figured out the ability to leverage this. He calls it intelligent leverage. And that's a whole nother story. I would encourage you to look at there's a video called Is MicroStrategy a Pyramid Scheme? And maybe I'll put it in the comments below here if I remember. But go watch that. You can see all about the intelligent leverage and what they're doing. And basically what this guy did was accuse MicroStrategy of being a pyramid scheme. Not a Ponzi scheme. They're different. Ponzi schemes and pyramid schemes are a little bit different. But, there's something there in terms of needing more money to keep the sats per share coming in. The last people to arrive are going to be the ones that pay the price for it. And I mean, that's kind of the case with everything. It's not specific to MicroStrategy. There's a lot of companies that act like this, except the difference between MicroStrategy and the other companies is they're building their company. They built their company on sinking sand, on fiat. Their reserves are in fiat or US treasuries. It's sinking. Whereas Saylor's, if you want to call it a pyramid scheme, it's on a very solid foundation, 330,000 Bitcoin there. So let's look at some pros and cons. The pros is that Saylor's shorting fiat. And the US is 36 trillion with a T. And we know the difference between a billion and a trillion, basically a trillion. So they're $36 trillion in debt. There's absolutely no way out. They're in a debt spiral, and the US is the best currency that exists out there in terms of fiat, and he's shorting that. So anybody with an objective brain and that can do math is going to see that he's going to win this trade by shorting fiat. There's no management fee. So that was one of the big things that people talked about initially before this premium showed up, was that the fact that if you're holding Bitcoin through like a ETF, like IBIT, BlackRock or Fidelity, you're paying about 1% per year. So that adds up over time. With MicroStrategy, there's no management fee there. It's actually the reverse. The sats per share has been increasing. Tax sheltered. So instead of buying Bitcoin, there's lots of uncertainty, capital gains in a lot of countries. You can put MicroStrategy into a tax sheltered account. I think it's a TFSA here in Canada, and I think it's Health HF. I don't know. There's a tax sheltered account in the US too. So you can get exposure to Bitcoin. You can ride the wave of Bitcoin. And then if you ever want to cash out, you can do it without paying tax on it. So that's pretty nice. There's no withdrawal fees. And that's kind of one thing that I've been talking about. I've been very consistent with that message on the Daily Bitcoin Journey, is that, you should never be selling Bitcoin for MicroStrategy. You never take Bitcoin, you never take the real asset, the underlying thing that's going to reprice everything here. You never trade that for MicroStrategy. Don't get greedy. But if you were to take your legacy, your pension, your savings account, and you were to cash that in and go buy Bitcoin, you'd probably pay a bunch of withdrawal fees for that, for taking it out of those registered accounts. So that's what this no withdrawal fee means. If you had, you've been paying into your pension for 20 years and you discovered Bitcoin, your conviction's high, you want to buy some Bitcoin, you want to cash everything out, you're going to pay a pretty steep withdrawal fee there. So point of this with the fees and with Bitcoin versus MicroStrategy, I would say that if you have any money in the system, the legacy system, the registered accounts, that's what we're talking about here. We're talking about MicroStrategy. We're talking about Bitcoin ETFs. We're talking about companies who are holding Bitcoin like Tesla. That's who we're focused on. That's what you should be moving your capital into instead of paying a bunch of fees. But if you have any money outside of the system, whether that's in your savings account, cash under your mattress, whatever, that should be going to the actual asset itself, Bitcoin. Another pro here is direct correlation to Bitcoin. So if Bitcoin succeeds and Saylor manages to hold on to their Bitcoin, MicroStrategy is going to go up by the same percentage, directly correlated to Bitcoin. So if Bitcoin succeeds, MicroStrategy succeeds. Not reverse though. So it's directly correlated to Bitcoin. So if you're a believer, if you got the conviction in Bitcoin, then it's a pretty good stock to own. Another pro is there's a huge mismatch right now in knowledge and conviction. So I mentioned that there's a whole bunch of people looking at MicroStrategy right now just because it's been doing so well. But the thing that we can take advantage of here is that those people have zero conviction over the strategy, over the asset, Bitcoin itself, and you do. So again, even though there's a whole bunch of people trading MicroStrategy, expecting to make a gain from it, if you can just kind of wait that out and weather that whole thing and look at this very much like holding Bitcoin, you're going to get through all that volatility. And you're going to let other people catch up. And by the time they catch up, this share could go from $500 US to who knows? Like the thing you have to keep in mind with Bitcoin, this is one of the cliches and the phrase within Bitcoin, is that Bitcoin has no top. There's no ceiling on Bitcoin because fiat, what it's replacing or what it's shorting essentially, fiat has no bottom. So this could go from 500 to 5,000 to 50,000 to who knows? There's no ceiling on it. That's the whole point of this. Over time. But in the meantime, there's going to be people taking quick money. There's going to be people taking losses. There's going to be people chasing gains, short-term trading, and there's going to be lots of volatility. But if you can look at this like Bitcoin and just ride through all that, then you're going to be in a pretty good place, I think. And the volatility, I put volatility as a pro and a con here, but it's good for both because without volatility, I think Saylor says volatility is vitality, which means there's opportunity there. If nothing ever went up and down, there's no opportunity to make any money there. So if you know what's going on here, if you can kind of foresee things, the best trade, if you're going to be trading MicroStrategy, the best trading advice I've ever received is do the opposite of what you want to do. Because human nature, human psychology, we all kind of think the same. And everybody's buying at the same time, everybody's selling at the same time. So whatever your instincts are, do the opposite of that. Because everybody else is going to be doing what you think is the right play. So that's how you can kind of capture some of the volatility there. The cons. The Counterparty risk. And I have this twice here because the first counterparty risk that you're looking at is Saylor. You got to trust Saylor to hold that Bitcoin, 330,000 Bitcoin. You're trusting MicroStrategy or Coinbase, I think, was the majority are held with that Bitcoin. So that's the first counterparty risk. The second one is the brokers. So even though I have X amount of MicroStrategy shares right now, do I really? The nice thing about Bitcoin is you can take self-custody of that. There's no counterparty risk involved with Bitcoin. So I'm relying on the brokerage to actually, they say they have those shares there, but if I wanted to self-custody those, in a tokenized world in the future, would I be able to take those off? So you're trusting the broker and you're trusting Saylor. So there's double the counterparty risk here with MicroStrategy. The volatility. If you don't have 20 years to wait this out, and you don't want to put all of your chips into one spot here because it could go down. Things go up, things come down. And if you're thinking short term, if you want to be cashing this out in the near future, then that could be a big problem for you, especially if you're getting in, after it's gone up, how much this year? 616%. So if you're 20 years old and you buy a couple shares in MicroStrategy, you don't care about the volatility. You might have those for 40 years. It's going to go up a lot. It's going to go down a lot. But over time, just like Bitcoin, it should go in one direction, up and to the right. So the volatility could be a problem for anybody who's looking to, at the short term. You could easily be caught on the wrong side of things here and be left holding the bag for a little while, especially if you need that, right? You don't ever want to be in a position within Bitcoin or MicroStrategy where you're forced to sell. This is all about a very long-term lens because it is volatile. The other con here is the big target. So we've seen people try to short the central banks before. The nice thing about this, though, is there's no head on Bitcoin. There's no CEO. There's nobody that they can put in prison for creating Bitcoin. Satoshi gave Bitcoin to the world and then disappeared. So unlike other people who have tried this in the past, there's no head that they can cut off of Bitcoin. And that's the underlying asset here with MicroStrategy. So even though I do think that as MicroStrategy, as Bitcoin continues to eat fiat, the fiat world, there's going to be a big target on his back. I know he's ready for it, but it's still a risk. Like if we get a different government in here in 4 years who's very unfriendly to Bitcoin and what's happening here, they could easily go after him and make his life living hell. And put a pretty big question mark on the MicroStrategy Corporation. So that's the pros and cons. That's everything that's happening there. And I guess to conclude, like, should you be buying Bitcoin right, or should you be buying MicroStrategy right now? I would say no. And the reason I say that is because 5x is pretty high. Like 2x, okay, 3x, okay. You should be paying attention to that premium. It's been going up fast and it's going to come down just as fast, I think, short term. Long term, it's going to go up and up and up with Bitcoin. So that's why I would probably wait. I don't think I would be buying it today. But again, if you look at this asset, if you look at MicroStrategy like Bitcoin, where you buy a couple shares, you hold on to it, you go to sleep basically for 20 years, like you're going to be in a very good spot here. If you try to time it, if you buy now and want to turn this into $500 or $600 tomorrow, like you're going to get burned. You have to understand they're still playing in this rigged system. MicroStrategy is. Bitcoin, on the other hand, it's free market. There's, people, some think it's suppressed. Some think there's some manipulation there, but it's 24/7. It's a global market. It's the closest thing we have to a free market. And when you're going into MicroStrategy, you're playing under their rules, which some people like. But when you're the little guy and you're trying to time things and you're going in with a very short-term view on it, there's a good chance you're going to get burned. So I would say anything right now in terms of pensions, savings accounts, retirement funds, you should be allocating as much as you can into Bitcoin related companies. And MicroStrategy seems to be the top of that right now. So if you're looking to make a quick buck, I would say do not buy right now. If you're going to get in at this price and you're going to hold on to it for the next 10, 15, even 5 years, then just like Bitcoin, you can buy anytime. So do I think that it's I kind of already answered this, but do I think it's a pyramid scheme? I mean, what isn't? What isn't? Think about any company out there who has a boss, who has a management team, and then supervisors, and then employees. Everything in life is that type of scheme. And so he's laid out his plan very clearly. Over the next 3 years, he's going to buy $42 billion worth of Bitcoin. There's no funny business here. You can buy, you can sell out of it anytime. And the people who think that they're going to be the last to this party are not going to be the last to this party. And even when things, and this is kind of what I want to end with in terms of the premium. Let's say that if you watch that video of the pyramid scheme, his thesis is that you need to keep feeding it. People need to keep coming in. People need to keep giving Sailor money in order to keep growing the sats per share. And there will come a time probably where that changes, right? Where some of these billionaires hire their own team of Bitcoiners to manage their Bitcoin that they control. There's no counterparty risk there. There's less volatility, I would say. More risk, I guess, in the sense that they're not guaranteed a return on it. But that's what's going to happen. And this premium will come down as Bitcoin becomes easier to buy, hold, and store. And when the money stops coming in, worst case, this thing's going to be 1-to-1 with Bitcoin. So just keep that in mind. Like if you're looking at MicroStrategy versus the ETF ceiling and floor are Bitcoin, right? It can't go higher and it can't go lower. But with MicroStrategy, you have the premium there, the volatility where it could go higher. It could be 5x, it could be 6x premium on it, but it's never going to be below that because it's holding Bitcoin on the balance sheet. So the minimum value of the company is going to be based on the Bitcoin that it holds. And then you factor in all the things that they're going to be able to do with it. So they're going to go from a operating software company to a bank, to a lending facility, to an insurance company. And they're just going to keep buying and acquiring profitable businesses because if they're generating cash, they can generate more Bitcoin. So Michael Saylor, absolute legend. There's a lot of different opinions on him, but he will go down as one of the smartest people in history by shorting fiat and by longing Bitcoin. And I can't wait to see the Hollywood production that they make about him. So just like every show we do here, there was no edits. And if you enjoyed this video, you can send some Bitcoin to our co-host here. That's his QR code. And let me get the banner here just in case while I wind things out. If you're watching this and you don't have access to your QR code, that's his wallet there. So that's the easiest way to support the show. You can like it. It won't do much. You can subscribe. It won't do much. But if you learned anything and you got some value from the show, you can send some back to our good buddy, Arnie, who has since left his duties, his throne. So that's it. Let me know what you think in the comments. Are you a buyer? Are you a seller? Do you disagree with anything? Did I miss some pros or cons? Let me know, because this situation, as they would say, is evolving. So if you own some shares right now, hold on to them for a while. If you don't, hold off for a little while. Wait till that premium comes down a bit. Have a great day, everybody. I hope you're doing well. I hope you're better than we're doing here. It's pretty snowy, and Arnie showed up to say goodbye. So have a great day, everybody, and we'll see you on the next one. Bye-bye.